Today, I'm going to be talking about one of my life insurance policies, the actual numbers behind it, and how I use it to invest. And with that being said, I am grateful that I have been deemed cool enough by our head of media that I get to finally have an entire episode to myself. It's been about 7 or 8 months since I've been able to do so. But today is going to be fun because too often I hear the idea that you shouldn't put money into life insurance and just go invest. And actually, there is a comment that is specifically on one of our latest YouTube channels, the And Asset specifically. There were a guy, he literally said that comment here. So not to call anything out specifically, but I do think that it is important that, I just look at the comments from time to time and decide, does it make sense to respond, comment? We've already done a good job. Again, this is our entire team that does so. And the guy said, maybe don't start at all and invest your money outside of insurance. And the response that our team shared was, for a lot of people, that will be a better option. And I think that was a great response. And again, I don't necessarily disagree with this guy, but I also don't fully agree with it either. And for myself, I highly encourage putting money into life insurance and then borrowing against it and then putting in other activities. And so what I'm going to do today is I'm going to show both, and I'm going to share why I do both and share the benefits around it and give more real life application, because I know often we share illustrations, we share numbers, and we talk about what those look like, and we talk about companies, but sometimes there's no like real life application that's shown. And so today was supposed to be an episode where it was going to be the And Asset Show again with myself and Caleb and Austin, some familiar faces. But Caleb is traveling; he's going to an event. Austin is traveling here with his family, and so for myself, this is me replacing the And Asset Show today, but getting to talk about my personal policy and investment thesis and kind of the direction that I want to go for myself, my family, and what I'm currently doing. And so, with all that being said, let's go ahead and jump in first and foremost with one of my personal policies. All right, so this policy is actually with Mass Mutual. Big fan, Mass Mutual. Today, they say they're not quote unquote big on infinite banking. Personally, I'm not a huge fan of coining it as infinite banking anyways. I like to just say, hey, this is whole life insurance, high early cash value. It gives me the bar to use it how I like. When utilizing it in a certain way, the life insurance companies don't like that. For instance, we even have a client who uses their Mass Mutual policy for land flipping. They buy land, they flip it, buy land, they flip it, they sell it, they put it back in the policy. And they're taking a policy loan like every single month. And with Mass Mutual, it's actually very easy to take a policy loan. You literally go into the app, request it, answer 5 simple questions, boom, and it's great. Now, if they get too often, they start like drawing red flags. They start to wonder like, well, is this money laundering? Is there higher chances of lapsing? Like, what's going on? And they give us a notice. And then essentially what we have to do is we just say, hey, don't worry. The client's using it for good purposes. They're using it for land flipping. Very reputable individuals, high sophisticated investors, and they're doing this and using it exactly how it should be. And then they wipe it clean and they're good to go. So with all that being said, when I got this policy started, this is, I think it's like 7 years ago at this point. This is kind of crazy just how time has flown. But I still remember when I got started with this policy. This is the policy where the number in the first year, here's this highlighted number, the total cash value. The first time I saw this, the number was at like $3,000. And I was like, okay, well, and I was just kind of getting started in the industry, trying to figure it out. And I went forward and pulled the trigger. And I was like, all right, I'm going to move forward because I know this is what I want. I understand the concept. But what I didn't understand is like how they were designed behind the scenes, how much cash flow I should have. And within like a week or two, like I just got this icky feeling in my stomach. And essentially went to the guy and said, hey, like you're bamboozling me. You're a scam artist, like all this stuff. And definitely shouldn't have went about it that way. But this was my money at the time, where I was like, man, I'm trying to put as much money as I possibly can and save as much as I can. And this is a lot of money for me at the time, of $18,000 per year to put into something like this. So I want to make sure that this is what I'm doing for my family. So he's like, hey, let me get a professional in. He got somebody else that knew how to design it, redesigned it for me. And you could see that in the first year, there's about $14,742. So $14,742 divided by 18,000. That's about 82% liquidity in the first year. This is a 20 base 80 PUA. And I was like, oh, this is exactly what I want, right? So I'm very happy with this policy to this day. I really enjoy MassMutual. They're a great company. We use them now within Better Wealth and Asset, and it allows us to, um, have confidence in them, especially when one of us has a policy here. We've used for majority of our companies we work with, somebody on our team or somebody that we know has a policy that's active with these companies, or else we wouldn't trust them nonetheless. And so, with all that being said, I'm just going to share a little bit about kind of like my thoughts and some of my journey on how um, how things have transpired over the years. And so, ultimately, taking $18,000 per year, putting into the policy breaks even. I think it's right around year 6. I think it's like 108 or 16 times. Let's just do this math real quick. 18,000 times 6 equals 108. So right around between year 6 and 7 is where the policy quote unquote breaks even. But for me, now that I'm like farther into the policy, and this is where having the long term mindset is really valuable. Early on, when you're thinking about this, if you're looking at it sheer for dollar access, it's not going to be the greatest because right, I put in 18 grand, but I actually, only have 14,000. That's a lost opportunity cost of an extra, $3,300 or so on and so forth. And so for me, it was all about when do I get more than $18,000 back when I start putting into this? And I also need protection for my family anyway. So what I essentially looked at and saw was, okay, your 1 to 2, $16,000 increase. Your 2 to 3, $17,000 increase, 30 to 47. And finally, year 3 to 4 was like, oh, like this is actually like you get excited now make your policy premium payment because now when I put $18,000 in, I now get $19,000 back. And the same thing now it's like going forth, like I put $18,000 in and I'm getting $21,000 back. So, and I kind of say this because this is like a right around the time that I am right now. And so I now get excited to pay my policy premiums, right? People don't necessarily get excited early on, and I can see why. But if you just have the long term perspective in mind, then you have the ability to have something that's incredible the longer you have it. Because even as like I go later down the road and I look at this thing, 30 years, right? It's like age 56. I put in 18,000 and it's grown by like 50 plus, 50, 60, $70,000. It's incredible. I'm gonna have a bank that literally I put in 18 and every single year it's gonna grow by 60, $70,000 plus. Plus I have this permanent death benefit for my family along the way. And that's just on the insurance side, right? Just specifically talking about the insurance. That's not even talking about what we can do with the money, which is some of the things that I'm going to talk a little bit more right now. Okay. So, and maybe in one of the last episodes, one of the few episodes we just posted before, you could hear some of the ideas we did, like on a scale of 1 to 10. It was myself, Demetrius, and Austin talking about what you would use your policy for and not. I had some of the more stronger ideas or opinions around using the policy for other things outside of just business. For me, I really am very agnostic in a lot of ways, but there's some things that I find a lot of interest in that's outside of insurance. Actually, I find more value from an interest perspective in the things that I invest in. The insurance just happens to be a very foundational piece for me, right? So first and foremost, I need insurance no matter what. I don't need it. I want insurance for my family. Like when I die and I pass away, I want to make sure that there's something there for my family and make sure it's set up right. By the time this is released, this is probably going to be um, old. I'm going to say old, but I mean like timeline. It may be a couple weeks, maybe 3 weeks, etc. Where Charlie Kirk just passed away, right? And I think for a lot of us, it gives us the the purview of just like evaluating life a little bit more. Of like, am I doing all the things that I should be doing today? Am I honoring God in the things that I'm doing? Am I living life to the fullest that is helping people and impacting the world? And also, at some point in time, we're all going to die and pass away. So for me, it just hit home a little bit harder, as I know it did for a lot of people, just kind of the way that it happened. Someone who is essentially an innocent individual that was just speaking his mind from just his values perspective and happened to get assassinated. And unfortunately, somebody now has to go home and tell his daughters and his wife that, or his daughter specifically, that daddy's never going to come home. and the next time you'll see him will be when you spend eternity with Jesus, right? But with that, it just creates more of an urgency, but also the idea of like, hey, I want to create a system, values while I'm alive for my family, but also want to put things in place for my family when I die and pass. And so for me, a permanent death benefit is super important to myself, right? It's the idea of not leaving anything for my family when I die, like makes me sick, because I'm the sole the breadwinner, quote unquote, the only person that's providing income to my family. So if I die, that stops and goes away. Well, then there's nothing left for them to essentially like survive off of, and my wife has to now go back to work and now take care of the kids at the same and it creates a something that doesn't sit well with me of as a man not being able to set that up well. And so and down the road, let's just say even I do live like another 40, 50, 60 years, if I don't have to use a death benefit while I'm younger, in my early age and my kids are gone at the house, etc., and have created enough assets and other things like that that have sustained lifestyle for my wife to be able to keep doing her thing, then the death benefit gets to go down to a cause, a church, somebody, something, value system that I care about. And that will be something that will be proud of to be able to live a quote unquote legacy for to something or some cause, right? So, with all that being said, knowing that a permanent death benefit is something that I really do care about. This is still for me is not enough death benefit, period. So I do have more insurance in other places as well to supplement that because I just need more, right? And I've now been in the insurance space for 7 years. You normally just don't have like one policy in general as you stay in the space for long periods of time because you understand the value behind it. So the death benefit that I have with my family, human life value, is larger than this, but it is still just awesome to see. Like you can see over time how it continues to grow. It continues to grow as you keep funding it, and it's just fun to see, and you just play around with it. It's like, well, let's just say I die at 85, right? It seems like a pretty, $5.5 million to be able to pass down to something or someone or some cause. I think that can make a massive impact, especially if it's done well. So, nonetheless, here's one of my policies. Here's what this looks like. And yeah, I'm getting excited to make my premium payment. I think I make it in January. And from the idea of thinking about how to make your premium payments, right? The cool part about it is there's a couple different ways that you can go about it. When you put your money into an asset that's liquid, right? You could technically e-liquidate it, and then you could pay your premiums, and then you're essentially like in this instance, you could pay your policy premium, and you'll get more money back. So let's just say it's 18,000. I put in 18,000, and then I get $20,000 back, $21,000. So then I go take that same 18,000, go put it back into the investment, and I have a $3,000 delta, right? Now you do have a policy loan on that, and there's some things to just consider. But if you're wanting like just an idea of like considering like investments and stuff like that, should I put it into life insurance or should I put it into something else? When it isn't in a liquid place still, like specifically like the market or crypto, or there are lending funds that can allow you to take your money within 30 to 90 days. Obviously if you're tying it up in things like real estate or other things like that you have a holding pattern of, let's just say, year, 3 years, like it obviously becomes hard to think about it from that strategy. But what you should hope is that those at least create cash flow, that the cash flow you can then put into somewhere separate, either back into the policy to like pay off the policy loan. And when the time comes, you could use the cash flow from your real estate or your whatever asset was to produce to pay your policy premiums, or you could use the loan function of your cash value to pay the policy premiums as well, right? And worst case scenario, like for my policy, the base amount on this is it's like $3,000, right? So this is the base policy 2,000, and then the lister, which is the term rider, it's $3,200. Right? So worst case, all I have to do is pay that, and I can also pay that on a monthly basis. So you start looking at it from a $3,200 just divided by 12. You only really need $266, $270 per month in this scenario to essentially pay for the base policy. So there's lots of ways to keep the policy in force, lots of ways when it's designed well to making sure that you can keep this thing long term, because the longer you have it, again, the more sexy, the stronger this is, the more that it performs, right? If you get a policy and you cancel it within the first 5 years, just don't even get one. Just get term insurance, you bet off. If you can't think about having this longer than 10 plus years, right? Don't even get one. Just strictly just get term insurance. And if you don't see the value, you don't see the value, right? And that's the thing at the end of the day. Not everybody sees value in anything. The guy that I just shared, he's like, hey, like, don't put your money in life insurance. Like, put your money into invest instead. And the statement that he also used is like, maybe don't start at all and invest your money outside of insurance. Well, again, when we're very specific about the way that we use these, is it's not an investing. Like, I don't use this to invest. Like, this is truly just a place to store capital, right? My policy right here is just a way to store capital that is essentially my safe haven, that has guarantees built into it, that I know it's there if I need it for a purpose. And for me, a lot of the times it comes down to investing. There will be a season where I may need it for something else that's more emergency. Like, I don't know, that, you can I call it self medicate, or the best word. Like, something crazy happens, right, where I just need a massive lump sum, whether because I'm sick or health insurance doesn't cover it, or somebody that I care about, they need money, or somebody lost their home. Like, there's lots of cool things that I could do for that may not return a direct rate of return from a dollar perspective back to me, but when there's a large lump sum of liquidity there, you could use it and impact a lot of people's lives, right? So that's what it is for. It's my storage of money for opportunities, emergencies, unknown events that happen. It just is safe haven, right? Versus, like, if you're just storing all of your money into somewhere else that has a little bit more ups and downs and volatility, you may need that money in the worst time of the market that just may cause more chaos than anything, right? And that could be it. And so it's just the way that you think about it at the end of the day. I know some people that never use their policy for anything. They just let this thing grow, ride to Valhalla, and it just makes them feel better at night, which I also love as well. It could be utilized for many different ways. The cool part about all this is, as this is growing, this is all tax advantage growth. So, when I shared with you, hey, like, I put in $18,000, my policy grows to 21, that $3,000 that I made, I'm not paying taxes on that. Yeah, I don't have to, because it's growing in a tax advantaged way. There's a tax wrapper that allows insurance to do so.
Most people have no idea where to start or how to really evaluate whole life insurance. That's why we've built The Vault. It's all of our best life insurance resources and educational tools all in one place, all for free. We have calculators, handbooks, crash course, deep dive videos on numbers. If you want to learn more, click the link in the description or tag comment below to unlock The Vault. All right, back to the video.
And so if that happens in any other investment that's outside of something like this, specifically like the market, or even if you have like a 401k, or it's just deferring essentially the day, that one day you will have to at least pay the tax bill. This is essentially a strategy where we never have to pay the tax bill, which is great. When I talked about down here, and I'm like, 75, 80 years old, right? And I'm making essentially 100 grand by just putting in 16 grand, right? That's a massive tax bill that would go to ordinary income if I had to actually pay that per year. But because won't have to, right? I can take a withdrawal up to the basis, tax free, and then after that point, I can take a loan and leverage everything else above that. So it's just an incredible vehicle to continually grow your wealth, save, compound, have a permanent death benefit that I want indefinitely. I don't want my term insurance to run out in 30 years and I don't have any insurance period. Worst case scenario, the market tank, other things happen. Like, I want to also be able to take advantage of assets when they're down. And that's kind of where I'm going to go into the next phase of this. Is there's two assets that I'm going to talk about specifically. I'm going to talk about real estate, and I'm going to talk about crypto. Okay. The reason why I like both of these asset classes. Okay, let's start with real estate. Real estate is a great asset, and both of these asset classes, I do think, take some knowledge, some skill, and some due diligence. I think if you get into either of these blind, you can lose a ton of money. And I don't encourage investing for anybody, period, unless you're actually are just going to do a sheer DCA strategy into the S&P 500, a low cost index, and you just keep it simple, or you do your due diligence and become somewhat knowledgeable in regards to how the asset class works. How do the taxes work? How does the growth work? Some of the risks involved. Do you enjoy it? Do you like learning about it? Like, what is your investor DNA? Are you looking for cash flow? Are you looking for growth, appreciation? Is there depreciation involved with it? There's a lot of things to consider, and there's a lot of different strategies out there, right? And the more in capital and liquid capital you have, the more opportunities that present itself, the more you just learn, the more you learn what other people are doing, what new strategies that are out there. You become accredited, and then you get into part of other groups and you see other opportunities. Like, it just becomes like this domino effect that allows you to learn more, invest better, be more. And it's kind of the idea of like how the rich get richer and the poor stay poor, is because the wealthy just naturally have more opportunity. They surround themselves with other, and I use the word wealth in this one scenario around money, because I do believe that wealth is a combination of many things. That I think your spiritual health, relationships, and health is way more important than money. Period. Right? The money is just another piece of it, that creates the combination of what real wealth actually looks like. And so I say all this to say is, when you look to invest in the thing that matters to you, it's super important how you actually look at this. Am I just trying to gamble? Because I'm going to show you a couple gambling things as well. Are you listening to the wrong people? Because I'm going to show you what it looks like when you listen to the wrong people. Or are you educated enough to actually be like, okay, I'm going to store my money into something like this, like life insurance, and I'm just going to sit, wait, and be patient until great opportunities essentially present themselves, right? So the reason why I like both of them, okay, so I don't put my money in actually like the S&P or the stock market in general. And some could just argue like the crypto market is just a more volatile version of the actual stock market, which I don't necessarily disagree. But my whole thing is like, well, if I'm going to put something into something quote unquote risky, well, I might as well put something with a little bit more upside, personally. So that's why I like that. And I do just like things that are a little bit more newer than like the idea of learning about something that's brand new that a ton of people don't know about. I've always been kind of break the mold in that scenario. So I really do just enjoy that. I've first heard about crypto back in like 2014, 2013, first invested into it in 2017. And so it's been a long journey. I've learned a lot. I've lost some money, made some, like, it's been one heck of a journey. Sometimes you have to kind of go through those things of like making money, losing money, researching to essentially become better at investing. And that's what I've done personally on that side of the journey. And I'm grateful for it because now I'm better for it, and I'm going to consistently keep getting better for it. On the real estate side, we always know that like some of the most generated wealthy individuals of our time have been used with real estate. And real estate has many advantages, right? Appreciation, cash flow. I mean, depending, right? It all depends on essentially the asset you're getting into. Depreciation from a tax advantage, right? There's a lot of really cool things about it. And over time, it should essentially continue to grow. And it's a hard asset that people really like to feel their hands on. And so you can't argue that real estate is a tested asset class that is incredible and has changed a lot of people's lives. And people have lost money, obviously, but that's again what comes down to knowledge and education. For me, I'm so busy running, building better wealth, right? That I have a hard time doing a ton of due diligence on real estate, like from a expertise of like, let me go find the deals, let me go vet them, let me go raise them, like let me do all that, right? That is a full-time job, like truly a full-time job, to be like a full-time real estate investor and be really, really good at it. So for me, I choose to do more of like the syndication path, where I build relationships with people who have done all that, who are the experts. And then essentially I vet them and then see their track record, see what their cash flows look like, look at the numbers, cap rates, all that fun stuff. And then I choose to invest my money into a project or an opportunity when it makes sense. And so I've done that in the past. Currently, right now, I'm not actively in any syndications, but I'm looking right now and vetting syndications to potentially do one here in the near future. So that's kind of that idea. So let's start with the crazy one, what a lot of people kind of just look at as like a scam, or like it's just like they don't want to be involved in, which is great. I think that's amazing. I think 99.9% of people should not invest into crypto, and if they do, they're kind of crazy. And honestly, at some point, you should just maybe DCA into Bitcoin if you don't believe in the market, or you don't believe in the dollar, or you think it's like the new digital gold, like whatever the scenario is. Like if you think like a long period of time it's going to go up, like it's kind of like investing in a higher upside than the S&P 500, in my opinion, personally, at this stage. Everybody has their own opinion on it. Cool. So let's start with that. Again, here's how the flow of this works from like the life insurance contract into something like the crypto market. Okay. So let's just pretend, like, I'm not going to pretend like for me, but like for you, you were like an expert in crypto, like relatively knowledgeable, and you understood like market cycles, the flows, the asset classes, the assets within them, the difference between an altcoin and Bitcoin and Ethereum, and essentially some of the use cases. And you've just been around long enough to see how some of these cycles work, right? You would probably have a decent idea of when to buy. And I'm going to show you like decent ideas of when not to and when to. I'm definitely not a huge person that's like, hey, you should DCA into crypto personally, unless it's maybe Bitcoin. Anything else? Probably not, period, because it's so volatile. There's huge ups, there's huge downs, right? So all the safe money, right, it goes into the life insurance policy, okay? It continues to grow. And you just let it sit here. You know, you don't have to invest your money in the first year. Just continue to let it grow. Year 3, year 4, year 5, just let it sit there. When an opportunity presents itself, that's when you take advantage of it. And when I say opportunity, I mean like a 2008, a 2007-ish, a COVID. There's always going to be another opportunity where there's an incredible opportunity, right? Just even back in April of this year, 2025, there was an incredible opportunity to buy a massive 20% down dip on even the S&P and even lower on crypto in a lot of instances. Incredible opportunity. That's when you should then take your storage of capital to go put it into some of these assets. And so if you look at this, I'm gonna show you what not to do and then what you could do. I'm not gonna say it. And so for me, this is like an example. Okay. So there's an interesting, we're talking about crypto first and foremost. Okay. There's an interesting thing that happened, if you guys don't know, two things when it comes to our president and the president's son, right? So first of all, you have Eric Trump that essentially said back in my opinion, it's a great time to buy ETH. And if you don't know what Ethereum is, it's essentially the largest market cap coin in the cryptocurrency world that everybody knows about, that a lot of applications are being built on it. And so ETH and Bitcoin are the two biggest things that most people talk about, and that's what most people are aware of. And so he's like, oh, it's a great time and opinion to add into it. It's like, cool. If you just follow what, you call them the elites or people well known or whatever, like say, then a lot of people would maybe like just go jump in and buy at this time, right? And so what I essentially did is I said, oh, like, okay, like let's see what would happen if you would have actually done so at that point in time. And I pulled this up, okay? So you may not be able to see it that well, but there's a point in time, which was February, when you could actually see Eric Trump tweets this. It's this time right here, this era, this top one. Okay. So it's about like $3,400 is what it was at the time when he said that. And if you look at the actual where it went to the after that, you can see the downturn, the amount of percentage down that it's went since then was 56%. Okay. So if you're like, hey, I have my life savings. I have 100 grand. I'm going to put it into Ethereum when Eric Trump says do so. Well, then boom, you probably should, buy it at that point in time if you're going to listen to other people, right? That is not the way that I personally invest into crypto. What I essentially choose to do is there's cycles and there's market timing and cycles when it comes to crypto that as of late, every 4 years, you see a massive downturn. And so if you look back to 2013, 2017, 2021, those all have been like crazy peaks, right? Like massive spikes where you see all the individuals like get excited, jump in, where they're like, hey, like, they tell their friends about it. The unfortunate part when it comes to trading and crypto, like stocks, somebody's got to lose and somebody's got to win. It's just it's point blank. When you essentially sell, somebody else is buying and vice versa. So when that happens, you have to be able to control your emotions to the fear and greed when it comes to some of this stuff, when it comes to investing period, and have like a foundational framework to where you can feel good about investing, right? And that's kind of where I also really like this is this gives you a peace of mind that like no matter what, I'm gonna have the ability to grow my money even if I don't choose to go, right? Like so I don't have to fear of missing out because I'm gonna have something safe, conservative that's gonna keep compounding over time no matter what happens. I can never touch this ever, and I'll have, just $4 million um, later on, closer to later on in life, that just would be another bucket of money that I could utilize. And I never have to invest another dollar, right? So that's the first thing. It just gives you a sense of peace, right? But back in 2022 of this last year, right, we could even open up just if we wanted to look at Bitcoin and we wanted to just look at it from like um, a 2022 perspective, you could see that the price back in 2022, which is not that long ago, it's actually crazy to think about. Okay. This is where the bottom was in 2022. Okay. The price of Bitcoin literally like 3 years ago was $15,000, $16,000. Okay. This is the time where nobody, period, is talking about buying quote unquote Bitcoin or buying crypto. Everybody's talking about it's a scam, it's going to zero. You don't hear anything from countries, you don't hear anything about um, MicroStrategy. You don't hear anything about this except just like we're in this massive bear market. Okay. This from this point in time for 15,000 all the way up to what it is today, right? Let's just see what the percentage growth is at this point in time, 15,000 all the way up to here. Right? It's like we don't want to make it 666. So 600 and we'll just say 650% growth. And even if you didn't catch the peak or bottom, like even if you were at like 30,000, etc., you were dollar cost averaging lower, like 30,000, 25, 20, like you started dollar costing average down versus dollar cost averaging up, and you're putting money into then that is where the real wealth is created. So my strategy is I store money into this thing, right? I keep it here, right? You just store it, let it grow, let it compound and into this asset class. Then when everybody is on freak out mode and everybody doesn't believe in the asset anymore and everybody is doing a fear monger on the thing, this is when I'll go take a policy loan, okay? Borrow against it, right? Use this to then go put it into an asset like this, okay? Then what you can do is, let's say you had then a 600, let's just say it was this year, okay, here. Okay. Let's say took $100,000 from this and then took it and put it into Bitcoin. Okay. $100,000, 600%, right? Let's figure out what it is. Well, let's ask ChatGPT. If I have 100K and it grows by 650%, what do I have? Way easier. Thank you, ChatGPT, for being my advisor, the advisor on advisors. Okay, you end up with $750,000. So at this point, right now, when everybody is calling for it to go higher, now they're saying 150, 200,000. It very may well go up that much, right? But even from here, let's just say it does go to 200,000. It's only 100% growth. That's not. It's from a risk to reward. It's not as high anymore. So like now is not the time where you want to be like putting all of your money into something like this. You wanted to essentially put into it when you have the least amount of risk involved. And then at this point in time, you could literally like sell half of it, right? Pay your policy loan back, right? So which would essentially say, okay, cool. And now I have $100,000 back, put it back into my policy because over the last 3 years, it would essentially be recurring a 5% interest. Okay, so 100,000, 5,000. So it would be 105,000 at 5% again. It's like 111,000. So you essentially have like after 3 years about 115,000 ish, 112,000 ish policy loan because it does accrue interest over time. Well, you have 600,000, sell $300,000 of your Bitcoin. You then pay your policy loan back. You now have a policy that's still growing, compounding, no policy loan, no interest on it, no nothing. It's still growing. You have your death benefit. You now even have a money that's set aside that you could set aside for taxes, or you could even say, hey, I'm going to use my policy for taxes in the future, right? The following year. And you still have, you know, 550,000 ish, 500,000 ish of dollars, half of it, 300 that's still in the market if they're still going to go up. And then it's a free and clear ride because you've already taken all of the money that you invested into it. And that other, 200,000, you could go spend it. You could go on more vacations. You could go buy a car. And this is how you accumulate real wealth is when you store money in a safe, conservative place like this into your life insurance policy. And then when an amazing opportunity presents itself, you then go and you go with conviction. And when that happens, you can get massive returns on it, right? But you can't do this if you're constantly dollar cost averaging into something like every single month, right? Because then you're just going to get like the 7%, 10%, 12%, and then it may go down and then it may go up and you may get a 30% one year and then a negative 5% one year. And it just like slowly compounds and slowly grows. That's a great strategy, but that's like a slow accumulation of wealth that I think was what creates like very middle class mentality personally. So for me, I like the idea of storing capital in a safe place that's still going to get 4 to 5% growth long term. Like, doesn't matter what the interest rates are. If you looked 3 or 4 years ago, interest rates were dang near, like when you look at some of the fixed buckets, like you look at savings, high yield savings accounts and CDs and money markets, 1%, less than 1%, 2% MO, like it's just horrific, right? But it doesn't really matter for the life insurance. You're going to get roughly 4% ish per long term on your policy over time, right? You're not going to get that right away because you still have some like costs that you're paying for like the death benefit, commission, like other things, cost of doing business. But once it capitalizes and you have this long term, you can't tell me that the this year when we're already here, where you say it goes from 975 to 37, the 18,000 turns into essentially 55. Like you can't tell me that that amount of growth, which is essentially a 3x, doesn't recoup all of your losses that you had earlier on, right? Which it does. That's how life insurance works. You get all these negative years early on, and then later on you get these amazing returns, and they essentially cross equal each other to be closer to 4 to 5% long term, which is why we calculate as internal rate of return. And that's essentially how I look at that. It's like if I want to build real generational wealth, store it in a safe bucket, right? And then take an opportunity to a chance at something that I feel like I have high conviction in. And because I've been around long enough, I've seen how cycles work. I see when people are talking negative about it, this is the best time to do it. When everybody's fearful, I get greedy. And when everybody is greedy, essentially get fearful. And that's kind of what you learn from Warren Buffett. And so that's what the strategy is. You could do the same thing in a savings account if you want to. There is taxes that you have to pay on that though, right? And there's no death benefit. So if you have a family and you care about them and you want to pass something down, or you want to be able to utilize your cash in a savings account to, at some point in time into the future, you say you utilize it. Well, if you go buy, let's just say an asset like real estate from your savings account, well, then all you have is the asset, which is the real estate or the crypto, whatever the asset is. You don't have the death benefit, which means you're forced to spend all of that money, right, down, and then you don't have anything to pass on to the next generation. Or if you have both, you have the life insurance and the real estate. You can then spend all of the real estate down, the cash flow, sell it. You can do whatever you want, knowing that you have this massive death benefit to still pass down to the next generation, right? And so that's why this becomes an amazing asset is it gives you options, it gives you versatility, it allows you to do both. And so this is my strategy. This is exactly what I do. I do that. But I don't listen to people like Eric Trump when he says it. I wait until like there's a really, really fearful moment. Like if you look at the same chart or that we were looking at right before that, which was this one, you could see is if you essentially would have just waited a little bit longer, right? Instead of here, you just when like this was the same time that the tariffs came out with the scare, all that stuff, and it just kept going down and down and down, right? You just bought lower down here. Even if you bought like here, you're now at you would have taken maybe a 20% hit at this point in time, right? I'm just using an example. But then now at this point in time, you'd be up 108%. So you could even see like even in a short period of time, that really does create some of the most gains. And that's on Ethereum. You see even the gains so far aren't even the greatest here, but they are here in Bitcoin. And so that's one strategy, right? The other thing is something just in regards to crypto that I noticed is there's a lot of manipulation going on, and there's a lot of like things that create a lot of greed, which is what I think becomes scary, and which is why you have to really know your stuff when it comes to this stuff. Because if you don't, you essentially could lose a ton of money as well. So something else that I'm just gonna keep crossing stuff off is here. Okay, Trump launched his own meme coin in January 17th of 2025. Like, I think when I first heard this, I thought it was a joke. I was like, there's no way that the president of the United States launched a meme coin on crypto. I was like, that is the craziest thing I've ever heard um, in my entire life. In my entire life. Um, it was like, whoa. And so everybody thought the same thing. So everybody got greedy, right? Everybody was like, oh, like it's the president of the United States, one of the most powerful men in the entire world. He's literally has his own coin. Let's go essentially take our money and let's go put it into this asset class called crypto, which is already so volatile. And let's go put it into this coin. So people were like, the day of, we're buying, buying, buying. Everybody's getting excited. It's going to the moon. It's going to the moon. This is like the day of. And then it gets as high as $77, $80, right? But then look at what it's done since. It's now down to $8.62. So if you were buying when you're fearful, or excuse me, when you're greedy, people bought up here. There are people that are holding this. They can't sell it. I mean, they could sell it, but they just lose out, right? They lose out on this 88%, 90% down, right? So if you essentially had 100 grand, you put it in, you essentially down to 10 grand. Okay. So you're way better off of like now, in theory. I'm not saying that anybody should, but like if you ever believed in this idea or this coin or Trump or president, like it's at some of its bottom moments. Like this would be a better time to accumulate, knowing that there potentially is a time for it to growth, right? I'm not even saying you should, but like you don't buy when things are here, you buy when things are here. And so if you have this bucket of money here, you could then borrow and say like, well, I'm going to take 20 grand of my 100 grand and like put a little bit in there, like 20%. And if it goes up 100%, which would only be to $16, right? It was as high as $80 at one point. If it only goes to 100 or it goes to 16, just great. I just sell it. I pay my policy loan back, and then I get to keep the other things for taxes and also lifestyle, whatever I choose to want to do at that point in time, right? That is where you can create real intentional wealth when you look at and do it that way. So that is my strategy when it comes to crypto. I sit here, hold it, and then when everybody's fearful, I go in and buy. And then when things accumulate, I then essentially sell it, save some for taxes, and then essentially wait until the next bear market, and then you rinse and repeat. And you just do that over until the value is no longer there, right? So there's that concept, there's that idea. Okay, not everybody here is interested in crypto as me, but the concept of like buying low and selling high when it comes to having a place of storage of capital, that's what a ton of people did in 2008. The people that had all the money, the people that had the gold, tell the rules, right? I think that's what Nelson Nash says. They bought a ton of properties that were just like on short sales. Those things, you had like 40 of them and they just appreciated like 100% over, a 3-4 year window. Sell them all again for market price, and you just essentially became extremely wealthy. So there's that concept, there's that idea. All right, so now let's move to real estate. And for me, and here's the other thing about just the last thing that I was saying is the people and politicians or the market makers or people that are hedge fund, like they're very good at manipulating the stories, and you have to be very, very careful, right? I think 4 years ago, there was even a thing that talked about that, like, they're coming out with a law that essentially says that politicians can no longer invest in the stock market. And now they're talking about that again. It became enforced then. And so everybody had to quote unquote sell, all the politicians, but it was already after the market did like 600, 700% returns. They already made all their money, whether that was from inside or however they accumulated or whenever they did. When the market's now at a peak, they're like, okay, now let's put in this law that we can no longer. They're not putting in that law when things are like at a bear market bottom. In the bottom of 2022, they're not saying that. They were doing that at the top in 2021, right? When all the craze is going on with GameStop and crypto and, the S&P and all these things are just like peak, like just going crazy. that's when they put in this law. Hey, the politicians, we're going to do the right thing. We're going to do the good thing. We're going to no longer, allow ourselves to invest into something like this. Um, and it's the same thing I think also with Trump. Like, you could say like, he launched this meme coin, he rug pulled us. Like, since he got in office, the market went down. Like, I don't know if he's going to do what he says he's going to do. There's a time when he told people to buy actually after like all the tariffs went down and things like that. And he's like, hey, this is the best time to buy, and it shot up. Amazing. Um, like if you believed him, like it actually happened. But if you would have believed in his meme coin at the time, like you would have lost money. And then Eric Trump says like, hey, you should buy, and then it doesn't. It actually goes down. You start to get played these psychological games, and you start to hear things over and over of like, oh, this is a good time to buy, and then it rugs. Oh, it's a good time to buy, and then it rugs. Eventually, you just become so numb to it that you think like news is irrelevant. And I think then that's what they do to where the last hurrah of it all. They're telling you the last hurrah is actually going to happen, and then we no longer believe it. And so, like I do personally, this is just a personal thing, that there is going to be a time from now until the end of the year to January where there's going to be a pretty crazy market increase, and asset prices are going to be just like sky high. A lot of people are going to get greedy again. They're going to buy at some of those things. The best thing to do is like there could be a point in time now with the interest rate environments, Fed cutting rates. There could be a time where there could be a slight dip before it goes up. Again, I'm always a big fan of like when things dip, buying versus buying when things are at an all-time high. And I say that because when you have your life insurance policy, again, it does create you a sense of freedom that, let's just say the market does tank in the next month or so in preparation for things to go crazy. Then it's like, okay, let me take a percentage of my safe funds and let me go put it into something like this. And if it does go boom, then great. Then I can then take advantage of it. Right. But you don't take advantage of it when things are already at like a crazy all-time high. I mean, the S&P right now is just going year, day after day after day, just front end fist over, just keep going and going and going. And I'm not saying that the S&P is bad. I think it's actually an amazing thing to do for a lot of people because it keeps it simple. But there's probably going to be a time when the asset class is lower to what than what it is today. It's going to be lower at some point than it is right now. And so by having your policy, it gives you the safety, it gives you the foundational place to just store and be patient, allow you to live your life of freedom because you don't have to worry about like what the market may be doing, knowing you have this asset class. You have a death benefit for your family to allow you to show up more powerfully, and you have a safe haven if worst case if anything happens. And then at the same time, you get to still take advantages when you do see everybody else is fearful. So there is that. And I do think that when he says this, I do think that he's telling the truth this time. With all the other things that people in the news have said, I think this is it. And usually there's a 4-year cycle, right? It's 2025. It's the end of the fourth quarter, right? 2021, end of fourth quarter, same thing, boom. 2017, end of fourth quarter, boom, right? So this is personal. Again, it's not nowhere near investing advice. This is clearly my just opinions on what I think. So there's that. I'm going through all these top things here. I have this now real estate thing up here that I want to talk about for the last thing. Also, I had this tab up here, which I thought was funny. Yo, Corey, big shout out to you, big dog. Corey's like, he's an advisor. He came to our And Asset event. We love him. He's great. You support us in all of our stuff, man. We appreciate you. Thanks for dropping a like and a comment in all of our videos. And yeah, man, I'm glad you think there's a little bit of humor. Here at Better Wealth, we try to be a little bit of human to it and not just be so strict and professional, which professional is important to us as well. Also, this dude said, I don't know why I said this dude. This guy said, dude, you low-key look like Anatoly. Ha ha ha. I was like, Anatoly, who is that? And then I Googled him and I was like, oh, okay. I was like, I know this guy. First and foremost, ripped, jacked. At some point in time, I was somewhat similar to this when I was playing football, and I devoted my entire life to lifting. But I was never as strong as this dude. This dude is insane. Like, I feel like this dude can like squat like 700 pounds. The most I've ever done is like 450. His bench is probably like 500. Most I've ever done is like 350. Like this dude just in his deadlift is just insane. Like, and he's just so light too. He's only 172 pounds. I know I'm getting off topic, but this is where we bring in a little bit of fun into our show and whatnot. So anyways.
If you're a high income earner or own a successful business, you're already creating real value in the world. The real question is, are you keeping that money, protecting it, and growing it the way that actually supports your long-term goals. At Better Wealth, we help people like you better keep, protect, and grow their wealth through various tax strategies, estate planning, specially designed life insurance, retirement planning, and even a fractional family office service. If you're interested in one or more of the areas we can serve and want to learn more, the next step is to book a free clarity call with us. Click the link in the description or tag comment below to get started. Back to the video.
Okay, so last thing I'll say is here's an idea that I really like from a real estate side. Okay, so likely what's going to happen for myself is I took the money from the life insurance policy, put it into crypto. I do think that by the end of this year, I think that crypto is going to be at a peak and I'm going to sell everything and I'm going to get out of it all. And then I have to decide where do I put my money now, right? I'm going to pay my policy loan back, right? If it happens by January-ish time, I will, pay off my policy loan. I have cash flow that I'm saving up as well. So, I'll be fine if the crypto is not ready to sell yet. But let's just say best case scenario, I'm able to sell it all by January 1st. Policy premium's up January 22nd. I sell it all. I save some money aside for taxes. I pay my policy loan back. I pay my policy premium. And then I need to figure out where else do I store money. I've stored it all into my life insurance policies. I have all this money. Like, I can go put it in the bank, which will probably do that for the beginning. I can go start another policy, which there's a very good chance that I probably will. And then now I look into other asset classes that I really like, which will be next here, right? I have invested into syndications before, and I think the next phase of it will be doing so here, which allows me to look at a deal and then be able to put a bucket of money there and feel safe and good about it if it's the right opportunity. And then get a focus on what I am good at, which is business, growing business, focusing on that, and allowing the actual experts do what experts do, right? And so when I look at this, I get these all the time from people, okay? This is just one example. This isn't just like one company that I believe in only. I do believe in them, or I wouldn't be even just showing this. But this is just one of them. I have others that I have a list of, okay? Like 3, 4 that I like vet and will consistently look at to see like what opportunities present themselves. And then I'll just look at it because this is just one home or not one home, one multifamily apartment building at the time that's coming up. And they have some every quarter that they just present. And then you could essentially can look through the deck. Okay, this is how you start, right? You build relationships with people, you get to know them, you interview them, and then they send you decks in your email often. And then you get to look in your email and explore what the decks say. Okay. You get to see who the team is, right? You vet the team. You're like, okay, who are these guys? You can do background checks on them. You look at their LinkedIns, right? You essentially like read their bios. Do I trust these guys? Have a personal conversation with them. Depending on how much money you have, like, usually the minimum amount is around $50,000. If you're going to put a ton of money, maybe you want to go meet them in person. You could go walk these properties, right? If you're like 100% serious about it, and you're like, I think this is something that I really want to do, you could go fly out there. You can do a business write-off. You could go write it off. And you can essentially go fly out there and view the property. And you can essentially just go look at the numbers behind it and see like, does it match my investor DNA in regards to who I am? Sometimes people hold on to your money for 3 years, 5 years, 10 years. If you're someone's like, I don't need my money for 5 years, right? I think and you want to just let it, forget it and sit it. Great. I'm somebody that wants my money back sooner because I understand that the quicker I get all my money back, the less risky it is. The longer you leave it somewhere, the higher the risk is, and especially if it's not producing cash flow. So for me, it's all about cash flow. It's all about how quickly can I get my money back. And it talks about everything, right? It talks about your splits between the limited partner and the general partner, how much percentage you get from your preferred rate. You could see like you could literally get every single information that you possibly can. And this is then where you could look at these and you could say, okay, like if I want to start investing in real estate, I can start figuring out like, well, what does IRR mean? What does equity multiple mean? What does average cash flow mean, right? And when you figure out a property that you really like, right, you then start to do the mental gymnastics in your brain of like, okay, I have my policy here, okay, I've paid everything back, okay, because I said I sold all my crypto, which is what I'll do, and I'll put it back into my policy, and I'll be right around here, okay? Let's just say 127,000. I'm going to exclude the money that I have sitting on the side, which I'll actually bring that up, okay, as well. Let's just say, I'm just going to use an example. Let's say I had $500,000 that I sold all of from crypto. I put $100,000 to the side for taxes. So I have $400,000. I paid the full policy loan back and the the premium payment, which is about it would be a total of 120-ish thousand, right? 130. So now I have $300,000 that's sitting in a bank, okay, and I have $127,000 that's sitting in my crypto and 100,000 that's set aside for taxes. I now then say, okay, well, mental gymnastics. I have a I could put the full $300,000 and I could put it in something like this, or I could take $100,000 and I could borrow against it, which this property by the time it's time said and done is probably will already be filled up, and so this won't be the one that I'll invest in, right? But when it comes to January, I'll start looking at properties really heavily, start vetting them, potentially fly out there, making sure like look at 4 or 5 different people, and I'll say, okay, like what's my returns, right? Well, if you put in 100 grand, this is what it's saying, like, your investment is 100 grand and your total return after 5 years is 205,000, right? You essentially doubled your money, and you can see like what your cash flow is, right? 3,000 the first year, 3,000 the second year, 5,000, 5,000. So you could see like, hey, like cash flow wise, like it's not necessarily the greatest, right? When you're starting to look at, it's like 3.3% year one, 4% year two, 5%. I think when you start to get towards the 5%, like it's actually pretty good. Like you're getting a 5% cash flow in general, especially when you could like your policy loan is 5%, right? This is where it becomes amazing. It's like, okay, my policy loan is 5%. Year three, I get 5% interest over on my life insurance, and then I take 5,000 and 5% interest here. I take this and I pay down my policy loan interest. Here, I do the same thing, pay down my policy loan interest. Here, pay down my policy loan interest, right? And then you essentially sell and you get your full money back plus some, right? The total return afterwards, after all the cash flow, is 179. And so you essentially made about like 79 extra $1,000 of return, that one you just made. And now you can take that $79,000 and you can go rinse and repeat and do it into another property, right? And you can do 50, you can do 100. So this is the idea of that I choose to do because I don't have to think about this. This is cash flow money, like or cash mailbox money. There's 3,500, there's 4,000, there's 5,500. That's just free flowing cash flow that I can just put it back into my policy, put it back into my policy, put it back into my policy, and then essentially when the returns come, then I get to decide again. Sit down, be super intentional. Like, am I going to put it back in my policy, like the full amount, or am I going to invest in another property? Or am I going to go do a lending deal? Or am I going to do absolutely nothing and keep a lot of it in the bank? Or am I actually now going to go buy a house? So now you can start making like real decisions when you start having more capital come in. But at first it starts, in my opinion, it starts with this. Like it genuinely does start with this because this forces you to start accumulating real money. This is even a small policy, right? Like if you start truly finding ways to increase income, decrease expenses, and save money and start a policy, and you think of this long term, and you do this for like hold on to this for like 4 or 5 years, and then now you start having like real decisions, especially if you're like now you're in the 30, 40, $50,000 saving per year, you can have real decisions on what it is that you want to do. And I know we have people that have their policies. They're like, where do we put our money now? Like we have so much cash value into these things. Where do I put it? Right? That's an incredible place to be at when you have true opportunities and decisions because you were enforced to save, right? You don't just go spend it, do diligently. Like you're like, I'm going to go put it in the life insurance and you're forced to versus like maybe go spend it on expenses or other things like it's forcing you to save. It's a forced savings, and it's not just growing in a bank where it could get 1% or it could get 4%, right? Or 5 depending on the season. But you also don't have to pay taxes, right? And it doesn't have the death benefit. You got to remember the and component of it, right? So that's something like this is what I find attractive because it produces cash flow. It gives me a greater return later on, like after 3 or 4 years that I don't have to think about. And my number one asset is going to be myself throughout that entire period of time. So this is me diversifying where all of my energy and resources go into the business. Time, energy, resources, thinking business, growing business, increasing income. But the extra income that I get when I don't put it back into the business, it's like, where does it go now? Well, that's when it goes into things like crypto and real estate and allows me to diversify those buckets, right? So these things are pretty intense, right? And this is how you know like if somebody does their due diligence or not. And so from a your perspective, okay, and I'm gonna end with this. I know I've been talking a lot. From your perspective, you don't have to invest into life insurance, right? You truly don't. For me, and I say invest, you don't have to put your money into life insurance. For me, it gives me safety, it gives me control. It's essentially a line of credit that allows me to borrow against and use for a different activity into the future. If I don't have an activity today, I just sit there and let it grow and compound. And it's going to grow with a tax advantage way with a death benefit for my family. That's incredible. Otherwise, you just sit there and put it into a savings account, right? Cool, your savings account is going to grow, right? But you don't get the tax advantages, you don't get the death benefit. Or you go invest it into dollar cost averaging into the S&P 500, right? Cool, that's your strategy. Do that. You'll become very middle class, and there's nothing wrong with that. I'm sure that if you're listening to this, you want to create true generational wealth for you and your family, not just money monetarily, but also values, systems, and being super intentional with that. I don't believe that dollar cost averaging over a long period of time into the same asset class is something that creates true intentionality. It's just as like I forget about it and don't like really want to do my due diligence and like how great is the asset? Is this a good time to do it? Does it add real value to what we're doing? Does it help us hit the goals that we really want? And maybe you decided you've thought through that and it is. And putting all your money in the S&P is what you want to do, or into a 401k, which I would personally think that that's one of the worst places to ever store money, knowing that you could put money into an asset class like the S&P at a low cost index and have control and access liquidity still at any point in time if you needed it. Yeah, there may be downturns, but you still have access. Unlike the 401k, you got to pay penalties and other things like that that come with it. So with all that being said, there's my investment strategy and thesis. My long-term investment strategy and thesis is probably way down the road is I'm gonna keep doing stuff like this. But then as I continue to grow my more policies and more assets and more income, from the skill set that I'm learning right now from the Better Wealth and what I'm learning is I'm going to eventually buy other businesses and take the skill sets that I'm learning now and help other people grow their businesses and take equity or just be a consultant for them to be my investment portfolio because I really love business and growing that. And my life insurance policy will be a my my line of credit to do so. Right? Imagine when we're looking at the numbers when there's like a million, 500,000, 200,000, like whatever it is. I can use that as a line of credit to go buy a business, a down payment, right? You get a loan from somewhere else and then you got to put a small amount, or you can do a seller finance, right? It's all about where can you borrow money at the cheapest rate that's easily accessible, that's safe for that the asset is safe, right? And using the least of your money possible to then create as much value to that asset to continue to appreciate, to then at some point sell or get cash flow from it. And not everybody's believes in debt, and I'm okay with that. Like if you don't believe in debt at all, then life insurance probably isn't for you either. Like the and ask the way we do it because you're borrowing against it, which does create technically a debt. If that is like your true philosophy around it, but that's not what we believe in. We believe in borrowing in the right context with the right products and getting a line of credit from the insurance company, knowing that we already want insurance because we care about our families is something that's incredible for us in a very tax advantage way. So with all that being said, this wasn't to persuade anybody in any way. This was just to share my story. I can't believe I riffed for an hour and 3 minutes and by myself just talking through this, sharing my thoughts, looking at my policy. Hope you guys had fun. Hope you enjoyed it. If there's anything below where you guys are like, oh, that's concerning, or hey, like I want to talk to you more about that, like let me know. I'm an open book. I don't know everything. And this is just me and my personal philosophy right now. 5 years from now, I know I'll think completely different than I do today. And that's okay. That's great. That's the definition of growth. But anyways, have a great day, everybody. And until next time.